So following our agenda for today's meeting, the first thing is to accept the minutes of the August 3rd meeting. I need a motion to accept the minutes as presented.
So moved. Oh,
And
second.
Awesome. We have a motion and a second. All in favor? Aye.
Aye.
All right.
Any opposed, like sign?
Aye.
The motion carries unanimous. We have accepted the minutes. All right, now for the big part. We're going to welcome Jennifer on, and she's going to give us the presentment of the draft internal funds audit report. So Jennifer, take it away.
Okay, thank you. And as Travis said, I'm going to be going over a draft of some of the highlights for the audit for the internal funds. And so I'm going to go ahead and share my screen if that's okay to show the PowerPoint. Okay, so can everybody see the PowerPoint presentation? Okay, perfect. Okay, so just a quick overview. The word you'll notice in each bullet point, draft. I just want to make sure, make it clear that right now these are draft reports that I'm presenting today. We are about 95% done with the audit. We have a couple items that we're finishing up, but because you meet quarterly, Carol and I felt like this would be the better time and to be a little more timely with going over the audit and what our results are so far. So we're just going to go over a little bit of overview of the financial statements, some of the key numbers, and then we're going to discuss the school findings. I'll go into a little bit of background again of what we do as part of our audit, and then we'll go over some of the district-wide recommendations that we have for improvements. So as far as the financial statements, I kind of gave a comparative of the 2021 numbers to the 2020 numbers. And so you could see when it comes to assets and liabilities, they're fairly consistent with the prior year. And that's again due to the nature of the internal funds, the money raised.
Jennifer?
Yes.
What's on my screen does not look like part of the presentation.
It's not slide 3.
No,
No,
Jeff, you're still showing your, I guess, looks like a
directory
file.
of files.
Yeah, directory of files. Yeah.
Your engagement screen.
Okay. Okay. Let me stop sharing and see if I can move it over to, sorry about that. Just lost. And it does not want to. Let's try this one. How's that? Is that PowerPoint? Yes, okay.
That's it.
So this is the slide that I was on. Sorry about that. And so we have the comparative numbers. And as I was mentioning, the total assets, the total liabilities, they're relatively consistent from year to year because the nature of the internal funds is to raise the money and spend the money that you raise that year. So so you're going to see each year the revenues and the expenditures are going to be approximately the same. So so then your cash, which is your primary asset, that's going to be again relatively the same. So you could see that these are consistent, but then when you go down here to the revenues and expenditures or the additions and deductions, you could see while they're somewhat consistent with each other, there was a large decrease from 2020 to 2021. We had a little over 10 million in revenue and expenditures, and then in 2021 it went down to about $6.5 million, 6.7 in revenue, and that of course is due primarily to COVID. We saw there was definitely a decrease in activity, but certain activities decreased more than others, and so fundraisers, for example, decreased more than than the decrease we saw maybe in admission events, because even though attendance may have been down at sporting events, there were still events that occurred, and with maybe limited capacity. So there was, although there were decreases across the board, the amounts of the decreases maybe differed depending on the activity. One thing I wanted to mention is that this year we adopted GASB 84, which basically there were some changes made in the financial statements, and that's why we have these slashes here. So in 2020, what you would think of as equity or fund balance was called internal accounts payable, and it was actually reported as more of a liability in the financial statements, where this year, because of we adopted GASB 84, that amount kind of fell down to a separate line item at the bottom, which is now called net position. So there's kind of a change in the name. And also here you could see, instead of revenues, we now call it additions to internal funds, and instead of expenditures, it's now called deductions. But the concept's the same as far as increases or decreases, but just the names changed a little bit. So I wanted to point that out. And down here, we have just kind of a blurb from Chapter 8 of the Florida DOE what they call the Red Book of their rules, states that a school board is required to have an audit annually of the internal funds. And so I always like to try to bring that up, that is something that's required under that Florida Department of Education Red Book. And as far as the financial statements, we had an unmodified report. So, meaning that the financial statements were materially stated in accordance with generally accepted accounting principles. We did put a paragraph in our report to let the reader know that GASB 84 was adopted, and that the result of adopting that standard meant that we had a prior period adjustment, because we moved that. If I scroll back, this right here that showed up, I told you it was a liability in the prior year, and now right here, and now it drops down into the equity section. And so we disclosed there that there was a prior period adjustment. That's what the standard requires, that we go back and restate as if the prior year fell under GASB 84. And so that resulted from the beginning net position being increased by that $10,492,000. And then as far as our footnotes, some of the more sensitive footnotes that we have in the financial statements would be for the investments, we're required to disclose if there's any certain types of investments that are that make up greater than 5% of the total. And so we did put in there that there's some corporate notes that are being invested, and that came out to about 6.9% of the investments. So just a little bit over that 5%. And then we do have a footnote regarding the possible future effects that will continue because of COVID-19 on internal funds, and that we're really uncertain of what kind of effect they're going to have on the internal funds. But as we see, it has had an effect in the last year or two, and will likely consider to continue to have an effect on the internal funds. So I mentioned during our planning meeting that our audits I always think of it broken up into two parts. And one is we go in and we audit the financial statements, just like any other financial statement audit. And then the second part is the compliance testing that we do. And so we do compliance testing on 100% of the schools. So we make sure that our sample includes items from every school. And we test areas such as, I listed them all out there, but we have deposits, which is looking to see if if the money is being deposited to the front office timely, if it's being deposited or submitted for armored truck pickup timely. And also admission events, there are reports that had to be completed, sales reports when tickets are sold, purchasing card. We're looking at things such as if there was authorization for the purchase, ahead of time. And also the same with disbursements. We're looking to see if every disbursement that we test has an invoice or a receipt attached to it. we are looking to see that it's approved ahead of time by the principal. And we're also looking at items such as sales tax. There are certain times where sales tax needs to be paid for resale items. And then there's certain times when sales tax can't be paid. And that's when those items are staying within the school and ownership is staying within the school. So we're testing all of those items during our compliance testing. So here we just have a little graph that shows the average number of findings per school and department. And so you could see over the last 5 years that it's decreased slightly, and it's kind of been on a pretty steady trend. And this year we were at 0.69 findings per each school or department. And down here by each year, I listed the number of internal accounts. And the reason why I do that is because there are certain, with schools, it's going to be pretty consistent. If they have internal accounts and they're going to use those internal accounts every year, but sometimes there's departments that may have an internal account and it's may not be used as often. So there could be years where it's not used at all, and then years where they do use it and have transactions. And so if they didn't use it at all, then they don't get counted in this number if there were no transactions. So that's why the number kind of fluctuates each year by a couple. The next thing I want to show is just the number of findings and how many schools or departments had each number of findings. So you could see out of our 142 schools and departments that had transactions in internal funds this year, we had 86 of them that had 0 findings. So 60% of the schools, which is a really impressive number, a very high number. And then you can go down and see 1 finding, we're at 23% of the schools. So between 0 and 1, you know, we're at almost 85% of the schools in total. So you can kind of go down and see, but the numbers get smaller and smaller. And then when we have the 5 or more findings, you know, it's usually because there's something that maybe happened at that school. Maybe there was some high turnover, or there was a position that was vacant and being filled. And so there's usually a reason why there might be a higher number of findings at that school than the average for the rest of the schools. But there were no schools where there were any instances of you know, fraud that occurred or anything that we had to bring to the district's attention that would be concerning. Like I said, it may be that there was somebody new in the financial secretary position that maybe just is getting used to the rules and the different processes, but nothing that we had to bring forth to the district. Next, I just wanted to kind of list what our most common findings were. And so you could see at the top, we have fundraising activities. So anytime a school wants to do a fundraiser, they're required to, the sponsor or the teacher is required to fill out a fundraising activity approval form, and then they have to get it approved by the principal prior to the start date of the activity. And so out of the sample that we looked at, there were 11 instances where there were forms that either weren't approved at all, there wasn't a principal signature on them at all, or they just weren't approved prior to the activity occurring. So to remind you, when we're doing this testing, because we're only looking at a sample, anytime we have an exception, if we have a school where we found 1 fundraiser that wasn't approved ahead of time, that does appear on our report, just to kind of put it in for you to understand that, you know, there's 11 of them out of 140, you know, odd schools and departments. That's anytime we come across it, it's going to be put on the report as a finding. The second one was deficit account balances. And so this one, we've had, it's roughly the same as the number that we had in the prior year. But we did find that this year it appeared that more of the schools, their responses to having deficit balances could be due to something related to COVID, whether it was, we've had, and we had this the year before, where yearbooks was one where they purchased yearbooks, and then in the end, they just didn't sell the number of yearbooks that they had purchased. And so some of the schools were just going to move towards a process where they have pre-orders only. So they know, who purchased the yearbook or how many were purchased, and they only order that many. So that they don't have this happen again. So, and then you can read down the list and see deposits not made timely to the bank. The schools have like an armored truck pickup, but they're still required to complete the deposit slip and to have their deposit made on a timely basis. And so there were some that where that didn't occur. And then we have the funds collected, not turned in daily to the front office. If the teachers are collecting money, or if there's a club or a team that's collecting money, they have to turn it into the office each day. And so we had a few of those. And then at the end of a fundraiser, there's a financial report that has to be completed. And this is just to show whether the fundraiser made a profit, or sometimes it makes a loss. And so it's important to have this form completed so that the schools realize how they did financially at the end. And sometimes there may be a fundraiser that takes a lot of effort, and in the end, they realize that they made $200 on it. Then they may want to reconsider whether it's worth the effort to have that fundraiser. So that's why it's important for them to have that financial report at the end. And that's supposed to be completed within 10 days of the activity finishing. So we had 7 instances where it either wasn't completed at all, or it just wasn't completed timely. So here, I know this is a small chart, hard to fit it on, but on one slide, but I just wanted to show the various findings, the more common findings that we have. And you could just kind of see by the colors that the gold are the number of instances in this year's audit, and then you have the light blue, and then the dark blue for light blue for 2019, 2020, and then the dark blue for the year before. So you can kind of see 3 years, the trends, and really, I say trends, but you could see the history. There's really not always trends in internal funds. You could see there's one year where finding, there might be a lot of one finding, and then the next year it goes down. It's really just almost, sometimes it could be the luck of the draw of what we sample and what we test. The one exception that I was looking for is down here. We have purchase orders that were approved after the purchase, and you could see those findings have gone to 0 the last 2 years, and they've the districts moved to an electronic approval process that has helped with that, with that situation where the POs have to be approved for them to be able to be generated, and for the process to be able to move on to the next step. So that's the one that is easily explainable. The rest, like I said, it could just depend on the school. It could depend on if there's turnover in the position, or just the samples that we selected to test. The next slide are our district-wide recommendations. And as I mentioned at the beginning, the one item that we have open that we're still working on are the IT general controls. We're still doing the testing, and the nature of that, there's a lot of back and forth. We have to ask for information, and then when we get the information, we have to go through and select samples, and then give the district our samples, and they have to pull additional information, and then we have questions about that. So there's a lot of back and forth. So that normally does take a lot of time to work on. So we're still getting through that process and hoping to have that done this week. So we normally, with every client, have some kind of recommendations we can make on IT general controls, just because each year they become more and more important with how we do business and with how the processes and procedures work. And so as they become a bigger and bigger part, there's usually items that we can suggest, suggestions we can make to kind of help protect the district a little more. So I'm sure we'll have some items later on that will follow up with a letter to you to share those items. But the second one we have on here is with the technical colleges, the accounts receivable, there were some situations where I picked a sample of invoices to test, and out of the sample, there was a pretty high, it was about, I originally picked 11 invoices to look at, and 6 of those were students where they registered for classes, but then they ended up not ever attending the class. And so those invoices really need to be, voided out in a timely manner. And so I have talked to a few people at the district who have some plans, and there is the ability in the software to be able to trigger something when the student doesn't attend classes. It's basically just letting the business office know that, taking the attendance records and letting the business office know the student registered for this class, but they ended up not attending, or they maybe withdrew at the very beginning of the school year, and letting the business office know so that they can then go in and either void out the invoice, or if the student attended for a little bit, there's a discount that's then given so that they don't have to pay the full tuition. So they understand that, and they're looking into utilizing that in hopefully this next year, so that we don't have these invoices that are really void, that aren't valid invoices. So right now on the financial statements, there were some amounts shown as owed to the district, which weren't really owed to the district. So that was kind of the result of that one. And then the second recommendation, and I do want to say with the accounts receivable, we're still discussing it with the district, and this is all, these were discussions we had last week, but we have we have 3 types of recommendations or findings, and one we call an improvement point that we just want to share, and those are a lot of times our IT general controls fall under there. Then the last one on this list falls under there. But then we have findings that can be broken into material weaknesses and significant deficiencies. The accounts receivable would not be considered a material weakness because the amount of accounts receivable from the technical colleges after the allowance for doubtful accounts is a small enough amount where it does not, even if all the invoices were not valid, it would not cause a material misstatement in the financial statements. So it would not be considered a material weakness. However, it's right there in that significant deficiency area, which by definition means it's not as severe as a material weakness, but it's still something that that we feel needs to be brought up to the attention of those charged with governance with the school board, and then also we would like to share it with the audit committee. So I just wanted to kind of bring that to your attention. And then the third bullet point on here would be one of those, what I mentioned, an improvement point. We know the internal funds manual has not been revised in several years. And there are some policies, like I mentioned before, the purchase orders now being approved electronically all through the system. So we just recommend that the manual be reviewed and updates be made for some of those practices that have changed over the years. And then to just make sure, the school board did issue a rule on school internal funds, just making sure that the manual agrees with those rules, and that, with bidding rules and any other school board policies, we want to make sure that the internal funds policy manual agrees with what those school board policies mention. And that is the end of my presentation. And I'll leave this up for 1 second. So it has my phone number on it and my email. And then I'll go ahead and now's the tricky part. The problem with having 3 or 4 screens is I have to find the buttons to stop sharing. But are there any questions or that anyone has about our presentation?
That was absolutely fabulous. And you say that about a week, maybe for the rest of the IT findings?
That's what we had gotten the last bunch of items that we had requested on, I think that was Friday morning. Yes, it was Friday morning. And so my IT auditor said he would be working on them this week, and he expects to be done with that by the end of this week. Yes.
Excellent. Dr. Hahn, you had something?
Yes, just a couple of questions. On page 4, when you reviewed the investments there, corporate notes were 6.9% of the fund balance. And I'm just wondering, how does that compare percentage-wise to the prior year?
The prior year, well, it was roughly the same. So now let me explain, and this is the way that the district, how Polk County does it. All their cash accounts and their investment accounts are what we call pooled accounts. And so there's a large investment account, and then out of that, part of it gets allocated to internal funds. So what I do is I look at the investments as a whole, and just make the assumption that whatever the district's invested in, I can kind of look at what portion is internal accounts versus the district as a whole. But with that, last year we did have, I believe we had one, I believe it fell right around that 5% where we're required to disclose it. So it's approximately the same percentage as the year before.
I just asked because it was a corporate note, and
it's not just one corporation. I mean, it's invested in a handful of different corporate notes, just to be clear.
okay. And then one question, I don't think this is for you, but on page 7, when you covered the issues by school, I guess this is more for Carol, does someone go back and after a short period of time look to see if they've actually corrected the schools with the most issues? Does somebody follow up on those?
Dr. Hahn, that's a great question. And in an ideal world, that is exactly what we would do, but we just don't have the resources to be able to do that unless it's something that is very egregious. And then we will, push aside some routine audit and do that. And we've done that with, you may remember some ticket issues, admission tickets and that kind of thing. So on a limited basis, we do that. Otherwise, they would not get looked at again until the next year that Carr Riggs and Ingram does the audit.
All righty. Anybody else?
I wanted to make comments, please.
Yes,
I
ma'am.
wanted to commend the staff and the administrators for the progress that we've made in our findings. I remember years ago, we were in a hot mess as it relates to a lot of findings, and we put some things in place and we were able to see some progress, but I don't remember it being as progressive as it is today. I think it was referencing that with no schools having findings, and then maybe a few schools having one finding, we were like at 83%. Kara, have we ever been at that point? I don't think we have, especially with COVID as well.
Right, I agree. And I think that the graph that Jennifer showed with the number of findings steadily going down, even though not by a lot, it is steadily declining. So I do think we're in probably the best position that we've been in that I recall.
And I think that we need to celebrate that, especially make sure that our administrators and staff members know, especially sometimes when you get new employees that don't really have the knowledge, but they've been able to get that training that's provided, and being able to see the results of that, to me, is very upbeat. So I would say kudos to all the staff and everyone else that was involved in making sure that we have a very good, clean audit.
Excellent. I echo that, Ms. Fields. Thank you so much. Anything else? Tom, I think you're muted. Did you want to say something? There you go.
There you go. I got it now. So Jennifer, what do you could on the page 8 is referring to deposits not made timely. What do you consider timely? I mean, is it something the administration is aware of what's considered timely?
Yes, so the policy in the manual is that if you have over $100, it should be deposited within the week.
So 1 week is the answer.
Yes, if the deposit's over $100.
Okay, thank you.
Mhm.
Anybody else? Having no more questions, thank you again, Jennifer, for your presentation. Absolutely fabulous. Great job. And we're going to move right along to the finance update.
Thank you.
Good morning. How are you all?
Good morning.
I wanted, if she will, Lisa, to talk a little bit about the financials that we took to the board, or we're taking to the board for this meeting, just a quick update. And then I'm going to go over our investments and give you an update on ESSER. Or I can do,
So good morning. Actually, I just wanted to start with where we are as far as the annual financial report and the comprehensive annual financial report. We have submitted the annual financial report to DOE back in September 11th was the due date on that, and we did get that in timely. We've been through 2 rounds of DOE comments. We had several variances and items that we had to address. I was assured by DOE that that happened across the whole state. There were a ton of comments. I think a lot of it contributed to the issue with COVID last year, really threw off the variances for 2021 as well. Because 2020 was so skewed, 2021 also caused some issues. But we have been able to get through all that. We got final approval on the AFR, moved on to the comprehensive annual financial report, and have submitted version 1 on that. And we have state auditors this year. Every 3 years we have state auditors. They are here. We have been flooded with questions, which is typical with the auditors. Several of us are working through the audit questions, getting the backup support, the documentation and all that for what they need, as well as doing the continuing with moving forward with the comprehensive annual financial report, of course, on top of the normal day-to-day routine. As Heather's just said, we did submit the September financials to the board for board approval. We're pretty proud that we are up to date on getting those financials submitted to the board. So that's kind of where we're at in our world here in accounting.
thank you, Lisa. Anybody have any questions about that piece? No. Okay, I'm going to try to share my screen. Can you all see the investment report? Okay, so we meet with our investment advisors quite frequently, and we just had a meeting about our quarterly investment report. So one of the important things to show is that the market due to COVID has been down, and our portfolio duration is still slightly below the benchmark. We're at 1.66 years versus 1.89 years. And our total earned income for the quarter was $332,000. We talked a little bit during our meeting about inflation, about how interest rates are likely to rise. So there is concern about our GDP growth still continuing to slow a little bit and inflation continuing to rise. And also our interest rates and expectations, we expect those to have a little a little bit of a slight drop in them, but our borrowing interest rates are rising. So our investment income is decreasing a little bit, or, a slow increase back, but it kind of ebbs and flows as we see what happens with the economy as we recover and try to get some of our folks back into the workforce. They've included an economic dashboard that shows low and high risks. Just for some additional information, you'll see a short-term and a long-term trend and effect, and how that's expected to have an impact on our investments. There's also a slide on interest rates and index returns currently where we're at. Fixed income strategy. I'm going to go down to where our investments are. That'll make our portfolio overviews a little bit more specific to us. So this shows our asset allocation, what's permitted by our policy. As you guys know, we just took our investment policy back to the board and made some changes to give us a little bit of wiggle room in order to try and receive the most gain for our investments. This slide shows our individual issuer limits. Here we are with our performance information. We have little charts for those. We work with Water Walker and they provide a lot of detailed information. David Jang is one of their managing partners. He also said if you all are ever interested in him coming to speak to you, he'd be more than happy to. This shows our quarterly portfolio transactions, the amount with our realized gain or loss. There's a lot more information in our quarterly reports, so I apologize for all the scrolling. We also have our Florida Fit cash pool. We have several different groups that we invest with. You can see that we have a little bit of our quarter endings 135.26. Over the past 12 months, our beginning balance was 159. But what's kind of interesting is we have no change in our Florida Fit account. But no change is better than a loss. Our time-weighted performance. This shows our portfolio appraisal. So to basically summarize all this detail and put it into layman's terms, we're hoping that the market continues to rise, but we're still at a very low yield. We were seeing 1 to 3% a couple of years ago, and then we've dropped down to a quarter or less in most of our investments, which makes it a little difficult because that is part of our general fund revenue sources as well when we invest those funds. And that's a source of income that we're not seeing right now. So we just continue to monitor our funds as a whole to try and get the most gain we can. I know there's a whole lot of information in this section. Do you guys have any questions about our investments? We're not losing money, but we're not gaining money at a rapid rate either.
I think my question, if I had one, is I noticed kind of towards the pie chart there that we had 27% of that allocated in credit quality to those that were F1 in funds. And looking through the sheet, I can see some of those that is allocated one of them is municipal bonds. Is there any talk about reallocating that to see maybe a better gain? Because I understand, the bond market and what it's doing there, but to have that larger percentage concentrated there is kind of just wondered about that.
We did discuss that a little bit with them. They've tried to keep our portfolio pretty diverse, but our advisors are taking a look at redistributing some of this. And we talked about the fact that we may move things around on a monthly basis to wherever we see the most gain.
Excellent. Thank you.
So we'll follow up, definitely follow up on that. You're welcome. Another point of conversation has been whether or not the state of Florida was going to apply for the ARP funding. So they did. We received instruction from the Department of Education. Our application is due November 12th. Our total allocation is $275,391,809. That's going to be split into two payments of $183 million and $91 million. When we submit our items, it has to show current and future expenditures. So we're working through that application right now, based on meetings that we've had with our schools and departments, and identifying how best to apply and spend those dollars. To date, I wanted to show you guys the Florida Association of School Superintendents, District School Superintendents, did a survey, and this is the information that we provided. You may have heard in the news or other places that the districts weren't spending their ESSER dollars. So out of our first allocation of $30 million, we only have $216,000 left. We have expended the ESSER 1 allocation. These are just journal vouchers that need to be done to clear up that last portion. What we've done is we've set up a fund to track our expenditures, and then when we receive the grant dollars, we move those funding amounts. ESSER 2 was split into multiple allocations. So we got $4.8 million for non-enrollment assistance. That's to find our students, our quote unquote missing students. So there were a lot of kindergartners that were enrolled that didn't come to the first day of school. A lot of those we found, we were actually, last time I checked, we were down to 600 missing students. But when we had our counts for our FTE reporting, we're only down a little over 100 kids. So I'm sure that this piece will be updated. We have to track it and report on it. So we have encumbered all those dollars. That goes to social workers and various other employees. We meet with local areas, the sheriff's department, different hospitals, the Department of Health, to locate those kids. Some have also left our district and gone to others, and some have gone out of state. Our academic assistance allocation, that's to bring our students back to where they were before the pandemic. It's been hard on a lot of them to be at home and a challenging learning environment. Our teachers have had to change the way they teach, and our students have had to change the way they learn. So we've been allocated a little over $24 million out of ESSER 2 to help focus on that. Our technology assistance to provide for learning at home, or our students that are in quarantine, even our staff that's on quarantine. We had a little over $6 million. We've allocated all of that except for $366,000. And those three grants have been accepted with the plan that we submitted to DOE. We did not get an advance lump sum for our district, which is actually a good thing. There were very strict deadlines. They had to be spent by September. I know a lot of the districts went back and forth to try and get an extension on that. Our final portion is in a lump sum allocation. It was $86.9 million for ESSER 2. We have all of that encumbered except for $5.9 million. And actually, we have I believe that we've identified a plan for that. We're balancing which expenditures fit better into ESSER 2 versus ESSER 3. We're still awaiting our approval on that lump sum from DOE. We go back and forth. They have a lot of questions. We have a question and answer period in which we answer those items. So that's where we are on ESSER. I just wanted you all to see that we have encumbered pretty much all of the funding that we have been allocated for. Does anyone have any questions about ESSER dollars?
Heather, I do. You mentioned something about ESSER 3.
Yes, ma'am. ESSER 3 is the American Rescue Plan. It's referred to sometimes as ESSER 3 or ARP. It's the same thing. I'm sorry, I should have clarified. That was the first one I showed you. That was about 276 million. That's broken into 2 allocations. We're going to, I guess the last piece on ESSER in December, we're going to update all these numbers and bring to the board what we've spent to date, what our status is with the grants and what we've received, and our final plans for those. Within ESSER 3, our instructional continuity plan, which is how we get back to school, how we got back in our buildings, and what we're going to do from there is a piece of that. You have to have community input for that part and also report out. So it's a lot of reporting, lots of criteria, lots of back and forth to get these dollars, and they are one-time dollars. So it's also important that we only spend them on one-time expenditures, not recurring, because we won't be able to count on that revenue in the future.
Can I make an observation, please?
Absolutely.
Seems to me that I know your investments are limited by school board policy, but it seems like the policy should take into consideration inflation. And when I see that you have a 0.07 or 0.09 increase in the portfolio, and inflation is running 4-5%, we're actually losing money in these funds every month. And it's just an observation. I know you're hindered by policies, but it just that just sort of bothers me that your returns for these type investments are so low.
Yes, sir. Thank you for that. We will have further conversations and review. As I said, we just redid our policy, but we will take a look at it again and make sure with the way our current environment is and where we're headed, that it is structured so that we can try and get the most out of our dollars. So thank you for that.
All righty. Any other questions for Heather? Thank you so much to Heather. And Lisa.
I had a question.
Yes, Ms. Fields.
Ms. Jenkins, are we going to go back to the investment company and let them know about the concerns that have been shared by Mr. Keys and Mr. Jennings?
Yes, ma'am. Absolutely. We do have a very good relationship with them. Like I said, we meet typically monthly. We also meet quarterly, but we talk to them on a daily basis when we need. So I'm going to set up a call with our department and we'll share this information with them.
Okay.
And if after we talk with them, if you all want to, speak, if you want them to come as well to our next meeting, they're always more than happy to. So we can set that up based on your preference.
So will you circle back and maybe let the committee know what the investment company has said concerning what they're recommending? How are you going to do that?
Yes, ma'am. We'll speak with them and then I'll put together a little summary and send it to Ms. Matthews and she can send it out to everyone if she's okay with that.
Okay, thank you very much.
Awesome. Again, thank you guys for that input. Moving along, Carol, we have the internal audit update.
Yes, thank you. So we have outside organizations, about 120 of those that support our schools, PTAs, PTOs, booster clubs, and they are required to submit an annual financial report at the end of every year. So we work with the school staff and also with the volunteer boards of those organizations to gather those, and that's no small feat. I don't know, it's been, you have a lot of turnover with these outside groups and their volunteers, and So it's like pulling teeth, but we eventually get most of them. And then Jennifer includes that in her internal funds report if anyone does not comply. We just had a few outstanding, and some of those cases were because maybe the organization went defunct, the volunteers were long gone, and just didn't file the report. But we do pretty good getting most of those in, and that at least requires some accountability from them. There's other oversight responsibilities that principals have with these organizations. For example, they're to get their monthly treasurer reports and just attend the meetings and just keep some oversight over these groups. And then we completed 5 payroll audits this year. I mean, not this year, this quarter, which completed our 2020-21 fiscal year of these audits. We had 16 in total. And we did a summary report that summarized all 16 audits. Of course, we issued a corrective action plan at the time each of these audits were done. And then when we're done for the fiscal year, we issue a summary report that just lists the common findings among all of the audits. And we choose a sample each year. We can't do 100%, but we choose a sample of schools to audit. And you got those reports. And sometimes those common findings are pretty steady from year to year, and we'll have some anomalies here and there. But, we kind of categorize them in broad categories, and that stays pretty consistent. We continue to do training. Jason Pitts just sent out emails requiring the online training that I developed years ago. And so we asked them to do that training every year as a refresher. And then these audits also are a form of training. But like I said, everyone doesn't get an audit every year. So that's a challenge. But and then I'll let Cece talk to you about the annual P-card audit that we do. Jennifer mentioned that they do some P-card testing, so we don't want to duplicate what they're doing. So we do not look at internal funds. We look at budget and Title I expenditures related to the purchasing cards. And we test for various things in those funds so that, again, we're not duplicating. So I will let Cece talk to you about that.
All right, thanks, Carol. We do a purchasing card audit every year. And like Carol said, we're just looking at transactions that are budget and Title I. We pull a sample of 25 schools, which this year that equated to 27 card holders for the fiscal year June 30, 2021. For the 2021 fiscal year, we had 687 purchasing cards that were assigned to administrative personnel, and purchases totaling $4.7 million were used to make purchases with the purchasing cards. We performed the audit to identify areas of non-compliance with established purchasing card procedures. Violations of established procedures puts an organization at increased risk of undetected thefts and errors. Our review covered all activity for 1 month, and then we do a scan of all the annual purchases for each school and department that we've chosen in our sample. In all, we reviewed 456 purchases, which equated to 11% of all purchases. We reviewed purchase details to identify order splitting, disallowed purchases, incorrect accounting, sales tax charged or not charged as appropriate, and missing documentation if they didn't attach a receipt or a temporary duty assignment form. The accounting staff performs an ongoing review of purchasing card activity and notifies the cardholder if there's any violations. This review has proven very beneficial in catching and correcting many errors, as we found through our audit. we would like to commend the Behavior Support Department because they received a clean audit. We found no procedural violations, discrepancies, or other errors in the audit for their purchasing card activity. After our audit, we send each school or department a report of their findings, and they're to report back to us with a response of their understanding and what they plan to do to rectify it so it doesn't happen in future years. We also sent a summary report and graph of all the findings and recommendations to all the schools and departments to allow them the opportunity to ensure they're in compliance and prepared for a future audit. Our audit findings resulted in 1 instance of order splitting, 22 disallowed purchases by 14 cardholders, insufficient receipts for 5 purchases by 5 cardholders, 52 account coding errors for purchases made by 19 cardholders. Temporary duty assignment forms weren't attached for 5 travel-related expenses for 4 cardholders, and sales tax was paid on 2 exempt purchases, which was later refunded. Each new cardholder has to attend a training session before they receive their card. And just like we have our Moodle course for payroll, there's also a Moodle course for procurement cards that all cardholders are supposed to complete annually as a refresher, and any of their support staff that might serve as delegates. There's also a comprehensive procurement card procedures manual that's available on the website for them to reference. And that.
Thank you. Thanks, Susie. Does anyone have any questions about anything we've covered so far?
I just got a quick comment. I think it's great to see that we do these audits and the purpose of them, because what transpires after the fact, one of those that Cece mentioned, in finding number 6, that there were 2 instances of sales tax being paid, but that was refunded. Another one in finding 4 where 36 of those 52 coding errors were corrected. So that's the purpose of these audits, and that's a great job of follow-up and going back and correcting these issues. So excellent.
Thank you.
Question, what is a disallowed purchase?
A disallowed purchase is, we have a catalog of contracts is the biggest of those that we found. There's a catalog of contracts. So like our toner, we have a contract to purchase from Race 6 Corp. Well, the schools will just go on Office Depot and order it because it comes the next day, or for whatever reason they don't know, or the turnover, or the new secretary isn't aware of the catalog. So they'll purchase from Office Depot. Well, that's a disallowed purchase. It's usually cheaper through the Race 6. So that's the majority of it. And then there was one where a school hired an interpreter, and that's not allowed either, but they weren't aware of that. But accounting had found that and made them aware. So now going forward, they know that they can't use the P card for that reason.
They have another avenue where they should have paid for the interpreter. A contract would have to be board approved or approved by the superintendent, and it has to go through a different process. You can't just do that on the P card.
Now, I'm curious, just to add a little humor to our meeting, was that in voice interpreter or is that interpretive dancing?
In his voice.
All right, Carol, anything else?
Well, I just wanted to say that Travis has agreed to serve a second 3-year term, which we very much appreciate. And the school board approved his reappointment unanimously at the last school board meeting. So we're very appreciative of that, of him. And sadly, Dr. Hahn's second-year term is coming to an end next month. So we will be losing him and his knowledge, but we sure appreciate all the dedication and service that you've given this committee as well.
Yes, thank you, sir.
That's all I have.
All right, with that, we're going to open up for public comments. I don't see anybody logged on from the public. Allow a few seconds for that. All right, hearing none. The next agenda item is to set our next meeting date tentatively right now for Tuesday, February 1st at 9 a.m. Does anybody have any issues with that timing? None. You guys are an easy crowd. All right. That being it, we'll go ahead and adjourn. I appreciate everybody and their time on the call, and we'll look forward to the rest of that finding with the internal audit with the IT, and I'm sure we'll distribute those and all those things about the investment. Heather getting those to Carolyn, distributing to the rest of us. Again, you guys know email channels are always open, so if you have questions after the fact, don't hesitate to reach out. So appreciate everyone on the call. You guys are awesome. We're done for the day.
Thank you.